Go. Hello, everybody. Welcome in. We're going to give it just like 30 seconds to a minute for everybody to get in here with us. Appreciate you joining us on a Friday. And for some of you, it's Friday afternoon. For some of you, it is Friday morning. So we're meeting here at a little bit different time than what we did in the past. So appreciate you joining us. I think I'm going to go ahead and we'll just give it about 30 more seconds, maybe. And then we'll get started and introduce our featured host today. Thanks all
Good
for joining
morning.
us. Yeah. Tell us where you're coming from today and what
Uh,
your weekend plans are while we're sitting here for a few minutes.
yeah, hello. I thanks, Mark. So I am coming to you live. I'm doing my best Rob Christman impression, coming to you from a remote location. So today I am at Cannon Beach in Oregon. I am looking straight at the beautiful Haystack Rock right now. I wish I could show you guys, but the glare is too hard. So we had the Texas Mortgage Bankers Association summer board meeting out here earlier this week, and
Yeah.
I extended a few days. Had my good friend Robbie come and join me out here, and so we're gallivanting along the Oregon coast yesterday, and today we're after this we're getting ready to head into Portland and eat our way through Portland before headed back to Texas on Sunday.
Sounds fabulous. Well, we'll get going here. And Bernard, you were the first name that I looked for on the registration list to see if you would be joining us today. So thank you so much for joining us. This is going to work, how it's the latest in Mortgage Today. This is our first show. We're back. We're really, really excited. Slightly different show name, similar concept to what we did 2 Fridays a month is when we're going to do the show at this time. And in each episode, we'll have a TMC lender member who joins us to kind of unpack what's new in mortgage, what's working, what's shifting, and what it means to all of us. The show is a space to listen, exchange ideas, and kind of move the path forward together on things. So if you have questions for us, put them in the chat for sure. If you have comments and want to join in on the conversation, put those in the chat as well. Register your team, get everybody on here on Fridays. So thanks for all of you for joining us. And for those of you who also mentioned that you missed an industry news type of show for TMC, because that's why we brought it back. So with me today, I have the amazing Erin D. Many of you know, who is the COO of Interlink Mortgage, and she's president of the Texas MBA
Yes.
this year. So thank you for joining me,
Thank
Erin.
you for having me. I feel so honored being the inaugural guest.
Yeah, absolutely. I couldn't think of anybody more. And for those of you who don't know this about either one of us, you should have seen the email exchange between the two of us, because it's a contest of who can use the most exclamation points. I think we're both
Agreed. Agreed. Yes, I am guilty of that for sure.
we were both very excited about today happening. So thank you again for joining us. I thought the first thing that we would talk about, Erin, is some of the things. There's so much stuff going on in mortgage right now, like kind of
Yes.
all at the same time. But I thought we would talk about a couple of things first that kind of we see as like good things, or things that are maybe taking us down a right path. The first one was trigger leads.
Yes.
So trigger leads passed, banning most types of trigger leads. Credit bureaus can no longer sell consumer data after a mortgage credit pull. I guess I know you've been working on this for like a really long time, and this is something that's kind of been on your plate because you were working with it with Texas as well. Um, Assume you're celebrating this as a win.
Oh yeah. Yeah, I was very happy. As soon as I saw that it was getting passed to the president's desk this weekend, I sent text messages out to my CEO and my sales guy and just, this is such a hard fought win, and there's so many people that deserve credit for this, right? Obviously at TMC through our advocacy efforts, we spend a lot of time talking about this. NBA has done a great job with their, with Ma and all of that. And this really just was the time the industry just came together to talk about these practices that were violating homeowner privacy, that were abusive, that were deceptive. They were, just all the bad things that we tried that as an industry we don't want to do. So to see our collective efforts finally pay off, especially because we got so close to the finish line before, just to have it ripped out from under us. And so it just feels really nice to see the efforts of our industry advocacy on behalf of consumers. I'm a little interested to see now that this pretty big income stream is taken away from the CRAs. I'm pretty interesting to see what renewal time is going to look like for our credit reporting. But at the end of the day, we've got this win, and it's a big one for
Yeah.
consumers.
Yeah. So going kind of down that path a little more, what do you think this means for things like lead gen, marketing, compliance? How does it change those things and how you look at them as an organization, and then does it change them also within the industry?
Yeah, I mean, I think there's definitely going to be shifts for the people who were buying them, right? So they're going to have to learn how to attract and retain customers on their own,
Yep.
and they're going to have to learn how to actually, market themselves in a way that is honest, right? But for those of us who don't purchase them, there's really is so far is really just a lot of upside because we're not going to have our consumer data being stolen out from under us after we pay huge fees for credit reports. We're not going to have our consumers come to us thinking that they've received, that we sold their data, and now they're getting hundreds of phone calls and texts. So, from a strategic standpoint, I think lenders like Interlink, other lenders like that, it's not going to be a big change to, adding more work for us. It's really going to be on those people who are reliant on those types of leads to survive. They're going to have to find a way to compete with the rest of us.
Yeah. Yeah. My first thought was, what does this do to consumer direct channels
Yes.
of our business, people that run consumer direct shops or divisions of their company? It would be interesting to kind of hear their take and what that means to their business model overall.
Yeah. Yeah. So now really, it especially if, refis that we're really now just mainly going to be competing with the servicers that we sold those MSRs to. So, kind of focus and hone in there. But consumer direct who are relying this, it's going to be a big problem.
Yeah, I would think. Um, Next one that happened, not last week, but probably the week before that, it might have been even the week before that, was Vantage Score 4.0,
Yes.
which it was announced.
It was announced
I guess that's
on
what
Twitter.
it didn't happen. It was announced.
Yeah.
Yeah, so Fannie and Freddie now accepting Vantage Score 4.0 for conforming loans. That brings with it alternate data sources that can be used and factored in to credit. The number that I saw out there, I don't know if this is legit or not, but up to 5 million new buyers potentially, because they now have credit things that they can rely on in their
Right.
credit score and allow
Yeah.
them to be home buyers. Projected 1 trillion in incremental mortgage activity. And then the number that, again, I don't know how accurate these numbers are, but this is what I found, was 33 million more consumers scored by Vantage Score than by a traditional credit score. But there are other things. So I want to there are other things that need to happen in order for really it to get implemented or utilized. So tell
Yeah.
me kind of like your path in thinking about those things within your organization, and what you'll maybe do, um, what your path is to get
Yeah. So
implemented if
right
you're
now,
going to.
Yeah, so I mean, so here's the thing. I mean, I don't know that there's enough answers out there for me to say we're absolutely not going to do it. I mean, right now, it's yeah, when it's there and it's available, if it's going to allow us to bring more consumers in, then there's no reason we wouldn't look at it. But there are so many things that dominoes that have to fall, decisions that have to be made. I mean, you talk about Vantage Score allowing for a score, creating a scoreable consumer after 1 month of reporting. Okay, well, is that going to be priced the same as somebody with at least 6 months of reporting, like a classic? Is AUS, are the algorithms going to give us approvals on that? How are Wall Street going to price those bonds? What are MI companies going to price these too, right? So there's just so many different things that we need to consider. What's the waterfall of how what are we going to pull first? Are we going to have an alternative to pull, the other one if we don't score on if we pull classic and don't get a score, do we then pull Vantage or vice versa? There's just a lot to consider. So right now, kind of where I'm at in my process is really just writing down all of the questions that I have and all of the things I think that need to be considered, right?
Yeah,
And
exactly.
I think that people think it's not going to affect them, and it really is. I had a conversation with a warehouse bank recently, and they're like, "Man, we're really glad we're not in that space. That doesn't affect us." And I was like, "Hold on, what credit score requirement do you have? Minimum credit score requirements? So are you going to change it with Advantage?" So this could completely change our entire paradigm, and I think it's great when you have,
Yeah.
people live in gig economies, things like that, that maybe are outside of our traditional credit system. Anything that you can do to bring people in and give them the opportunity for homeownership, right?
Yeah.
I think is a beautiful thing. There's just a lot of risk that we need to wrap our hands around in terms of how it's going to be priced and looked at on the secondary market, from a rep and
Yeah.
warrant perspective, all that.
Investors, how are investors going to adapt with
Yes.
Vantage Score usage? I mean, there are just a lot of things that it's not as simple as an announcement that it's okay, we're good to go. I think
Correct. I mean, like,
everybody
what is
found that
Moody's going
out.
to rate these bonds? I mean, it's so much, and it feels like it's like the lender is actually the last people in the chain that are gonna like figure it out. We've got 82 dominoes above us that have to fall before we're like, okay, that's what we're gonna do.
Yeah, yeah, yeah. I get it. I mean, maybe moving things forward, maybe moving things forward the right way. And this is a way of trying to jumpstart it and get people to act on it. I mean, that's
Yeah.
kind of how I looked at it when I saw the announcement.
Yeah,
Um,
it's exciting. I mean, I think anything we can do to try to look to do things different, like we just have to always be willing uh to reconfigure our industry, and I think this is one way that we could do it.
yep, yep. A win for the industry, or I think everybody would see this one as a win. VA partial claims.
Yes. Yes.
Yeah. So, and it also puts things, I think, in a place where everybody would like things more, where this now aligns with FHA and USDA
Hmm.
in how things are done. So I know that you've had some experience in working with this and working, with VA borrowers and those types of things. It was posted that the relief would be for about 70,000 veterans
Yeah.
that are currently delinquent. My understanding is that missed payments then can be deferred to the end of the loan. No interest, no refinancing needed. Am I missing anything there?
I mean, I think you've got really the crux of it without getting into, too much of the nitty-gritty. I think that the important thing here is that for a brief period of time, our veterans were left without a really good relief option, loss mitigation option. And that's really, I mean, our veterans are people we want to make sure we serve the most, right? And so it was really a disservice to them. And VASP was a good program. A lot of people took advantage of it, but it kind of did create a situation where you could adverse select and go down to that 2% interest rate mortgage, which you do have to be careful with that. I think that was probably a bit too far, but you can't leave veterans without an option to keep their homes. And when they have situations that are one-time temporary situations or something like that, and they can long-term afford the home. So it's good that we've got this put in place. And again, this was a Herculean effort by the industry in a very short period of time. We were in DC in April for NAC, and we met with somebody from Representative Luttrell's office, and he was on the VA subcommittee, and they were like, wait, what? Like, had no idea. And so from April to now, it's gone from
Wow.
that to this, which I think is great. And, it's impressive to see things can move in our government if they want them to.
Yeah. If they want them to, and you find the right people. I mean,
Correct.
I feel like it's always about finding that right person. And
Yes.
then, I don't know, somehow personalizing it to them to a degree that they understand, number one, the importance of it. And number two, what it actually is and how it's impacting somebody, which you almost have to find like some sort of personal connection, I feel like that they've had
Absolutely.
that then like makes it matter to them
Exactly.
to a
Yes.
whole different degree. It's like you almost have to sell your idea, I feel like, in that way. But
Well, and I
that's
think you're right, and not to belabor the point, and I think the same was true for trigger leads, is that's why our advocacy efforts were effective, right? Going and talking to legislators, going and talking to legislators with real life stories. One of the guys in my advocacy group had a screenshot video of all of the phone calls he got on trigger leads. I have my own personal story with my brother and all that. And same thing with VASP, when you can go there, that's why it's super important to do those advocacy trips and meetings. And so just a side
yeah,
commercial for advocacy there.
yeah. Well, and because we know those people, I mean, wouldn't it be delightful if they would focus on all of the things that we all wanted them to? But they have like a lot of other things on their plate that you have
Yeah.
to, it's like you have to move it. You have to move it up the list
You have
somehow,
to be loud and squeaky.
loud and squeaky. Huh. Are you describing? It's like I understand. Yeah. Let's talk about a topic that has been talked about tons, and I see varying things in the last week. Rates up, rates down. Where are rates going to go? The whole Powell situation and things. To me, it feels like it's almost like mortgage rates have become very politicized at this point is what I feel like. Now, other people are saying that's not true, and they're just holding firm to policies and how they've seen, rates impact the economy and everything else. But share with me kind of like what you feel about that situation as rates just kind of, it seems like they're pretty stabilized at a certain point. They're not going dramatically up or down at this point.
Yeah, I mean, so first on the Powell Trump thing, by lowering the overnight interest rate, which is really, with the Fed funds rate, you can move some levers there. You can help with investments, things like that. So there are certain things, certain levers that can pull. But when you talk about the rate at which the Federal Reserve can borrow money, and then conversely, what the rates at which then homeowners are going to borrow money, right? Because Treasury bills are basically seen as the lowest risk, so mortgage rates are always going to be higher than that. Well, Trump is talking about how we need to lower rates so that we can borrow money at a lower rate. The federal government can borrow money, but at the end of the day, it's all about what investors are willing to take for our bonds. And we are so far in debt that investors don't want to pay or receive 1.5% on their investment in the United
Right.
States, right? So even if you lower the overnight rate, that does not mean you're going to have an immediate drop in your 10-year, an
Impact.
immediate drop in your
Yeah.
30-year MBS, right? Like,
Yeah.
so to me, it's just all silly. We need to be focused on getting our debt down, and how do we put the United States in a position where investors want to buy our bond, right? Is my personal opinion. Um, so the interest rate thing is that, I mean, the market, it has stabilized. Rates are going to be what the market wants them to be, and when it looks at the overall risk of it. So Powell does feel like has kind of moved the needle a little bit, because for so long it was focused on jobs, 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 and now the jobs numbers have gotten weaker. To be fair, I have been on vacation for a week, so I haven't looked at a ton for my own mental well-being, but the jobs numbers have softened a bit. And so now Powell's talking about tariffs and the impacts on tariffs, so it does feel like Powell's moved the needle a little bit there as well. So, I don't know what's politics and what's not. Not in his head, but it all seems silly, especially when at the end of the day, it doesn't matter where they set interest rates. It's where investors are what the rate of return investors want to receive.
Yeah, I think sometimes it causes those types of things cause us to focus on the wrong, it's like on the wrong things because ultimately it's what we hear. We don't
Yep.
like dig into kind of some of the rest of it. What do
I
you
did
think?
appreciate the super awkward press conference with Trump and Powell in their hard hats, though, like arguing over how many what buildings were like included. Like, what is even is this?
So I didn't see the press conference. I only saw the memes that came out of that. So I should probably go back and listen to
It's so awkward. It's like a scene from The Office.
that's kind of the memes that came out of it, to be honest with you. They were
Yes.
very similar to that. So I'll have to go back now and look at that. What do you think that like the rate environment, it's been where it's kind of been at for a while in general terms, moving up and down a little bit from time to time. What do you think that means for lenders planning, for the fourth quarter and what that means for their businesses? I feel like everybody's done like almost all the trimming that they can do everywhere. So what do you think that means for lenders?
So, I think for lenders, it's important that, you have a budget and you have a plan for the year. And I think it's important that you stick to it. With rates kind of holding a little more steady, you're still struggling with the same affordability issues. You're still seeing consumers out there, right? Because consumers are out there seeing all of the, the barking back and forth about interest rates and how unaffordable homes are. And so, so you're seeing applications be softer. You're not, we didn't have a huge summer bump. We had months that were over our projections, which is great. We love that, right? It's always great when you can do more than you can project. But I think at this point it's still like steady holds the race, and you just need to be conservative. You need to stick to your plan. And I think that you just need to be prepared for this kind of stasis to last. I just think this is the new normal. We're going to have bumps up here and there, but I don't see all of a sudden things turning around and us having some like crazy refi boom. So, I just think that we've been in this cycle long enough to learn that we can't get overly excited. It's great. Interest rates are better, or getting better. At least last time I looked, they were, they were a little bit better. So I think
Yeah.
that's great. And I think every little bit is going to help bring more buyers in the door. And perhaps the longer that we can hold these rates kind of consistently, we don't have the volatility, the up and down days that we used to have. That I think is going to help. It's
Yeah.
going to help in confidence for loan officers when they're not terrified to turn on their MBS highway every single morning and see bleeding red. I think that helps loan officer confidence to get out and sell. But at the end of the day, it's going to be when our consumers confident that they can afford a home, that they're making the right decision for themselves. And consumers are just so stretched right now. It's hard.
Yeah, that was one of the other things that I wanted to talk with you about. So I'm going to skip around a little bit on the things that we had sent back and forth. But the age of home ownership, and there's some things going on with residential construction too. It's like, but the median age of first-time home buyers in the U.S. is 38 years old. Now, that seems really high to me, but I also see where that could be. Um, but it just seems really, really high for me. For repeat buyers, the median age is now 58.
Crazy.
Yeah, and I think that 58 plays into people aren't moving. People aren't
Correct. Yeah, you're in.
downsizing in the same way. People aren't, I mean, people have kind of settled in a little bit more. 38 seems high to me, but at the same time, is that because people can't buy when they want to buy, or is it because people are establishing their families a little bit later in life than what you used to? And so the need for that housing isn't, what do you kind of think plays into that? I would just love your opinions on what you think plays into that number. Is it truly just because people can't buy a house?
I do think that's a lot of it, right? I talk to a lot of I have not a lot. I have some friends that are kind of in that younger age range, and for them, buying a home just feels completely impossible. So they're riddled with student loans, especially because they're back in repayment now, right? That's a whole thing. And then housing prices, they're going down in some markets, but down from an extremely elevated levels, and other markets are still increasing, right? And so for them, they can't afford a down payment, even the 3%, or they can't afford that payment. More and more, if you look at the newer vintages of specifically FHA originations, and you look at what their average debt to income ratio is, it's high 30s, 40s, and
Yeah.
that's really stretching it for people, right? When you think that that's gross income, and so I think people just can't afford it. I think the reason people are starting families later is the same reason. I think it's because they can't afford it, right? You think about bringing a child into this world and the cost that it consumes, and there's a lot of other things that we could go into it that we could get over, get into over some tequila someday, cultural factors, things like that I would love to opine about. But I just think at the end of the day, what we are seeing is that the affordability crisis is real. And I think student loans honestly just factor so much into that, because
Yeah.
now even borrowers who, if they had student loans, but now if they hadn't been paying on them since they've come back into repayment, now that's reporting back on their credit, and now their scores went down. So even if they were saving money for down payment, now their scores make them unlendable. So there's just a lot. And if you look at a lot of the indicators, you see that there are signs of stress in consumers, even, just renters. So it's really sad, and I hope that we can find a way to come out of it, but I'm worried it may take a big value correction.
Yeah. Well, it seems like there are just so many factors that need to be corrected in that. The other one that I think of when people are going to buy a house, and I was just talking, I happened to find out the president of the home builder of my home actually lives in my development. So I was
Oh,
chatting
wow.
with him. The pool is a great place to like meet people and find people I found in my community. But I was chatting with him at the pool while our kids were playing, and we were talking about like the whole insurance issue. We were talking about a number of
Mhm.
things, the whole insurance issue, what they're building currently, how they're building different currently. But insurance, you used to literally go to your insurance agent a day before you were closing. You would get your thing and you would show up at a closing with your insurance cert. Well, now I feel like insurance has gotten so high some places that automatically takes you out of the buying
Yes.
stage of things. So you add in student loans, houses not being
Yep.
affordable, insurance
Yeah.
um, into that
It's a really bad
equation.
picture.
Yeah. Yeah. That so many things need to turn. Now, I have noticed in my neighborhood and in my market, and Minneapolis was announced as one of the better places to buy this last week, which it's like, if we're a better place to buy, I'm like, what? I mean, I just can't imagine how bad everywhere else would be. But yeah, it just does seem like it's people have just they're not thinking about it even anymore.
Yeah, agreed. And so the Texas MBA, we're about to put out a white paper actually that specifically addresses the insurance crisis, and is kind of putting forth some incentive-based ideas for ways that we can kind of build more resilient communities, and that we can retrofit existing communities, in a way that's not being done necessarily through legislation, but through incentives and just ideas really. But the whole point is that the crisis specifically with insurance is not going to be fixed by one industry or one law, any of that. It really is going to take so many different people to come into it. But and I think that's one way that we can focus on bringing those costs down, because if you have communities that are more resilient, the insurance, the insurance claims, all of that is not going to be there. And then you can go back to kind of those days where the insurance was the last thing that you did right before closing. You're like, put in $50 a month on your 1003, and that's good till you're ready for your CTC, right? Like those days are
And,
over.
and then you find out it's $300 instead, or whatever it
Correct.
is. And Ira in
Correct.
the chat points out a good point, utility costs. So
Yeah.
I live in Minnesota, which I swear we're going to be annexed to Canada. I always jokingly say that at some point. But our electricity comes from Canada here. And
Oh,
so
wow.
any tariffs that are placed on Canada are going to be directly reflected here. And I don't know, New York, and so there are three states I think that impacts, but they're going to be directly impacted by anything
Wow.
related to utilities.
Yeah,
So
that's a
I
good
guess,
point.
yeah, so it's like it just seems like it's just one more thing. So yeah. one more
Mhm.
thing, add it on. I'm ready. That's my attitude these days. It's like, okay, go ahead. It's like you're
What can
gonna
we
do
do?
what you're gonna do. I'm not gonna get upset about it. But yeah, yeah. We have just a minute left before we go today. So I had one thing that I wanted to just ask you personally. So you
Yes.
are the president of
Yes.
the Texas MBA this year. And
Yes.
I know you're going to do fabulous things because no matter what you do, you always do. But I would love to
Aw.
just hear from you a little bit about what, kind of like what you want to accomplish in having that role.
Yeah, so kind of one of my big focuses is what I just discussed was that white paper and really just trying to kind of lead the efforts and trying to find solutions to help our communities become more affordable and resilient. So that's a really big one. We are also in November, November 4th in Austin. We are throwing our first ever Texas Housing Summit at the LBJ Presidential Library to commemorate the 60th anniversary of the founding of HUD. It was signed by LBJ, so doing it at his library,
Oh,
and we're
cool.
bringing yeah, it's super cool. It's a day-long housing summit, so it's not just mortgage. We're bringing in home builders, realtors, all of that. And so what we're doing is we're really excited. We're bringing in just top-tier talent. We have really great people coming in. So for me with Texas MBA, it's just making sure that we have a seat at the table, that Texas continues to lead to help our communities, help our industry, to advocate, and to help bring up. We have tons of programs that are help bring up and coach people, train people in the industry. So just really excited to help bring in bring in new talent and then continue to shine from an advocacy perspective from the Lone Star State in Austin and DC.
They couldn't have found anybody better to put
Thank
in
you
that
so much. I
position.
love you.
Right back at you, girl. Yeah, they couldn't have found anybody better. We're really excited to watch what happens there and are here to help in any way possibly that we can. And thank you
Oh,
so much for doing this. It means a lot to
thank
me
you.
that number one, you would want to do this on the inaugural, and then that you would do it while you were on vacation is just even better. We really do love you here and appreciate everything that you do for the TMC family. Everyone who
Oh,
joined, thank you so much
love
for
you guys.
joining. Come back and join us in 2 weeks on the
I'll be here.
22nd, where we will be showcasing another lender member and the items that are happening out there in the industry. Appreciate you for joining us today. We'll see you then. Thanks, Erin.
Bye, guys.
Bye.